Cash from investment. Okay.
Financing.
Third one.
Financing activities.
Cash from. The right way of saying is.
You can't say from.
Cash operating activity. Cash flow from operating activity. Cash flow from investing activity. Or operating activity cash flow. Investing activity cash flow. Financing activity cash flow.
Maybe you also spend.
Yeah.
So you're not from. So issue operating.
It could be both. To or from.
Yes.
So these are the three headings that categorized or differentiated and designated by IAS 7. Now what is the cash flow from operating activity? All the cash that either you generate or you used in your day-to-day or normal ordinary course of the business. The word ordinary course of the business is important.
Emphasize that one. Ordinary course means whatever activity you have in your CR. Right? So that is your normal course of business.
Yeah, suppose in this, if you talk about this group, cigarette business. So the cash that you generate or the cash that you pay for maintaining and running your day-to-day business of cigarette is cash flow from operating activities. Can we think of examples?
Sales.
Sales. No, we don't say sales. Collections from customers. It could be cash sales collection or it could be collection from the credit sale customer. Number one. Number two, another example.
Payments.
Payments to suppliers. So when you say payments are very correct answer. It could be cash purchases or it could be payment for credit purchases we have done with the suppliers. Third, employees, salaries.
Somebody told salaries.
Yeah, salaries. So the salaries and wages and all other operating expenses. All those cash payments, and sometimes you may also have other income which also you need to factor in here. Investing activity. What do you think?
Purchase of
Fixed assets.
Investment for purchasing or procuring or acquiring non-current assets. Could be a fixed asset, could be intangible asset, could be anything.
sale of fixed asset.
Exactly. Proceeds from the collection of sale of fixed assets or expenses or payment for disposal of any.
First, you will get the notes. So whatever you need the cuts, write it down. It's in here. You will get the notes, huh?
Anyway, the slide is here.
Yeah.
So I don't want to go through the slide. I will completely discuss
Yes.
and then I will run through the slide.
Yes. You will receive the slides.
Yeah, you will
So
anyway
you
receive.
write down the cuts only. Addition.
So, talk about investing activity, buying all your non-current assets. So, if I go here, this 462 is my only non-current asset in this business is property, plant and equipment. But then in a generic business, you could also have investment, you could have goodwill, you could have other intangible assets or anything. So the total payment that you will make, you have to put down here. Third, financing activities. How you finance your business. Mainly, the shareholders could issue shares. So proceeds from issue of shares. And then there could be ordinary shares. And also sometimes you may pay more than the value of the ordinary shares. How do you name that? Let me say your par value of the share is $10.
Par value means the face value.
Face value or ordinary value or nominal value. And market value is $12. So, in this case, when I said that the proceeds from collection of issue of ordinary shares, let's say we have 100,000 shares for example. How much You think the collection from ordinary shares. Collection from ordinary issue of ordinary shares. How much? 100,000 into 10. This will be the collection from ordinary shares. But in fact, I have received in total 12. Yeah. What premium you call it? You call it share premium. Share premium is $2 into the number of. So this total will come. And also, you may also have loans and financing facilities for the purpose of financing the business. And then, if you happen to repay the loan, or if you have received the loan, that also will fall into this. So, cash equivalents, cash flow from operating activity, cash flow from investing activity, cash flow from financing activity. So these are the definitions that you will see in IAS 7. Is that clear? When you will read the IAS 7 standard, So, I have given you a verbal explanation of the definition. I have not written down the definition. This is available. You could use it. And if you really download the PDF of the full IAS 7, which will also give you that. But however, my note is there, you can use it. Now, preparing cash flow statement. When we produce cash flow statement, standard says that there are two methods in which you can prepare cash flow statement. Can someone tell me what are those two methods? Direct method, and the other one is indirect or indirect method. Standard prefers which method? Haider.
Opinion, please speak.
Those days, when the way the standard phrasing the term, they use the term called benchmark treatment, allowed alternative treatment. Old days, no, not now. In that time, that's how now we use the term standard prefers, standard not prefers. So, what do you think the standard preferred method of preparing cash flow statement? One gentleman told me indirect method, correct? Any other answer? Or everyone accepts what that gentleman said? Can we put him a green signal or red signal? 50-50, nus yani.
Either you have to be one side or other side.
Yes,
No.
there can't be grey area,
Yes.
either black or white.
That is dangerous.
Yes.
Don't go there.
Atik, what do you think? No idea? Habibi? Yeah, Mudir? Same? Standard actually prefers direct method. Please go and read it. Standard prefers direct method, but the problem is practically preparing the cash flow using direct method is a bit cumbersome. Doesn't mean it is not possible. Therefore, in exams, examiners prefers this method. In practice, it is also allowed to prepare cash flow statement using indirect method. Every single financial statement you read, it is prepared using indirect method. doesn't mean the standard is saying, my friend, go and prepare. See, now also you should use the way they phrase in English. If they prefer indirect method, this in shouldn't have come here. In is something coming on the back end, right? The forefront is direct. Do you see that logic? So please understand, direct method is only the method that is preferred by the standard. But they have not said you should not prepare using indirect method. So as we said, as we understood, there are direct method and indirect method. Now we need to understand how I prepare cash flow statement using direct and using indirect. Now if you look into the cash flow statement, a cash flow statement, as we understood, there are three sections. One is operating activity, investing activity, and financing activity. The difference between these two is only applicable to operating activity. Regardless of the method that you chose, investing activity and financing activity, there is no difference. Difference is only applicable in operating activity. Either you choose direct method or either you choose indirect method, yet the final answer here will be same. Is that clear? The remaining two will be same. So now I will show how we prepare using indirect method. Thank you, sir, for your big help.
I will also can see.
Yeah, that's we both will plan together. So, cash flow is what do you call that? Statement of cash flow. We first need to name the statement. We named it. Then we need to name the period. Now, if it's balance sheet or if it's a statement of financial position, we are naming it as on a particular date, 31st December 2022. Asset. Whereas if I prepare income statement, I am saying that for the year ended 31st December 2020, meaning 1 January to 31st December.